certainly been a volatile stock this year. It's been a good performer for us so far in 2019. And we like the steps Larry Culp is taking as CEO to lessen the debt on the balance sheet, make this a less risky business. We very much like the aviation and healthcare businesses. And we think when you look at a piece-by-piece value, you get to a number that's meaningfully higher than the $9 the stock's trading at.
When it had its big jump, were you tempted to bail?
No.
Not even a little bit?
No, not even a little bit.
I got you. I'm just.
But remember, we own 2% of the portfolio in GE. We've got like 30% in financials.
I understand. So let's talk about them. Are you feeling better about the group?
I don't think we ever really felt worse about the group. So yeah, we feel great about the group. These companies are fundamentally performing really well. They sell at 8 to 10 times earnings, a little bit more than book value. I heard somebody on one of the CNBC shows a few days ago say they wouldn't touch a bank because to them the businesses look a lot like utilities. Utilities today sell at twice book, 20 times earnings. Please bring that pricing on for our bank stocks.
Yeah,
and the banks are better businesses. They're structurally advantaged. The big banks can gain customers. The costs for fraud protection, for mobile apps, for compliance, they don't scale up with size. And it just makes the big banks able to take customers away from smaller banks. So the banks have got good organic growth in addition to great cash flow generation.
Yeah, although
and PEs have half the market.
What about rates, though? I mean, it's the obvious response, I understand, but it is a significant overhang to this group. As long as rates remain low, can bank stocks perform?
Well, with rates at 2% right now, these companies are earning 12 to 15% on tangible equity, and the market's pricing that at 8 to 10 times earnings. I think if rates move higher, it will obviously be a positive for the group, but they don't need that to be cheap.
Bill, it's Joe. I agree with you as far as your allocation towards financials, but I've heard a few people suggest in the last couple of weeks that potentially financials could be exposed to the kind of political rhetoric which has pulled down the healthcare industry, the conversation surrounding transaction tax, further regulation for the financial sector. Are you worried about that political headwind?
Well, I think for any investment, it's worth thinking about what unintended consequences of regulation could be. But when your entry price for these stocks is about book value, I just don't see the downside. Maybe that takes away a little of the upside if there are bad consequences from regulation. But I don't see that creating downside when you're buying these stocks around book.
Let's talk about another stock and one that you've added recently, and that's Constellation Brands. Tell our viewers why you like it.
Well, Constellation went down quite a bit after they made the large investment in Canopy. They put something like $20-some a share into that, which at market today is worth in the mid-30s. That's not generating any income for them right now, in fact, losses. Yet without subtracting that from the Constellation price, Constellation is priced at a multiple consistent with other consumer product companies that aren't growing. And Constellation's big products are its Mexican beer franchise, Corona, Modelo, and Pacifico.
I know all of them well.
and hopefully you'll be knowing Modelo and Pacifico even better as they get better distribution off-premise.
Yeah.
We think the growth that has been going mid to upper single digit there can continue, and that eventually both the premium growth needs to be reflected in the multiple, and also the Canopy investment needs to be reflected.
I have to run, but quickly, S&P Global, another one that you like. Tell us why, please.
Historically a 20% grower, great value for their consumers. A bond issuer pays a basis point a year, saves 30 basis points by having a rating. The rest of their that's about half the income. The other half comes from proprietary data. Capital light business model, good organic growth, great cash flow generation, and sells at 20 times earnings. Same multiple as a utility. It's silly.